when we talk about global trade, the headlines are always full of the big names, right? The huge corporations, the major industries, the politics of it all.
Hmm.
But beneath that, the real impact, the waves, they almost always hit the bedrock first. Small businesses.
That's exactly right. They feel it most acutely.
And today we're diving deep into a perfect example of this. We're looking at the new trade deal between the United States and South Korea.
It's a really significant development.
Yeah, it was this last-minute agreement, basically forged to head off a much steeper set of tariffs. Our insights for this deep dive, they come from Chris Lehnes. He's a factoring specialist, and he's analyzed how this deal is likely to ripple through the world of American small businesses.
A critical perspective.
So our mission today, let's try to unpack the core parts of this deal. We want to understand the consequences, and they really are multifaceted. There are some, unprecedented opportunities, but also some pretty significant challenges.
Both sides of the coin.
Exactly. And we want to help you, our listener, figure out how to navigate all this. Okay, let's unpack this. So maybe just to start us off, what's the biggest thing, the fundamental change in this new U.S. South Korea trade agreement?
Well, the most immediate, and I'd say the most significant provision is this new 15% reciprocal tariff on import.
15%, okay.
Yeah, and it's really crucial to get this.
Yeah.
It was a compromise. It averted a much steeper 25% rate that was definitely being considered.
25% would have been huge.
It would have been. So this 15% structure, it's a really notable departure from the previous agreement, the U.S. Korea Free Trade Agreement, KORUS FTA.
Mm-hmm.
That came into effect back in 2012.
Right, I remember that. Mostly duty-free, wasn't it?
Exactly. Under KORUS, most consumer goods, industrial goods, they largely had duty-free status.
Yeah.
So this 15%, it isn't just, a small adjustment. For a lot of small businesses operating on really tight margins, this represents a fundamental shift in the cost of doing business.
Right, it's not trivial.
Not at all. It could mean the difference between staying afloat and having to completely rethink their model, maybe even close. It just resets their pricing, their competitiveness almost overnight.
Okay, that 15% tariff is definitely a reset. But was there more to it? Beyond the tariffs, any other major commitments baked into this deal, maybe in areas we wouldn't immediately think of?
Oh, yes, quite substantial ones, actually. And they really signal a sort of a deliberate reshaping of the economic relationship.
Yeah, okay.
So South Korea has made this massive commitment to invest $350 billion in the United States.
$350 billion, that's serious money.
It is. And a significant chunk of that is specifically earmarked for revitalizing the U.S. shipbuilding industry. That's a big deal in itself.
Huh. Shipbuilding. Interesting.
Yeah, but it's not just that. The investment also targets other critical sort of high-tech sectors. Think semiconductors, nuclear energy, biotechnology.
Okay, future-focused stuff.
Exactly. And on top of the investment, South Korea also agreed to purchase $100 billion worth of U.S. energy products. And importantly for many businesses, they'll also further open their market to American-made cars and agricultural goods.
Okay, so investment and market access.
Precisely. What's fascinating here is these commitments aren't just abstract macroeconomic figures, right?
Right.
They are direct injections of capital and market access. And that's going to create completely new supply chain dynamics, new business opportunities, especially maybe for smaller companies that are agile enough to adapt.
We've talked about this big shift, this new landscape, and yeah, for a lot of small businesses, that sounds pretty daunting.
It can be, sure.
But let's flip this. Where do these new rules actually open up maybe surprising doors, opportunities they might not have seen before? Where's the fresh wave of export potential for American small businesses here?
Yeah, that's the positive side, and there definitely is one. This deal really does open up the South Korean market more, particularly, I think, for American agriculture and certain types of manufactured goods.
Okay, like what kinds of things?
Well, think about, say, a small family farm, maybe specializing in organic beef out in Montana, or a craft brewery in Colorado making some specialty beers.
Right. Niche producers.
Exactly. South Korea's agricultural market has, historically been pretty protected, lots of tariffs. But under this new deal, these smaller producers might find better market conditions, maybe fewer non-tariff hurdles, too.
So easier to get in.
Potentially, yes. I mean, KORUS already started phasing out some farm tariffs, but this new agreement's explicit focus on market access, it could speed things up. It might allow genuinely small producers a real shot at competing over there.
Okay. And manufactured goods.
Similar story. Maybe for smaller independent manufacturers, people making specialized machinery or medical instruments, perhaps even unique consumer goods. South Korea has a very tech-savvy, very brand-conscious population. There could be a real appetite for unique American products.
That makes sense for physical goods, but what about services? That's such a huge part of the U.S. economy. How does a deal like this affect, businesses that aren't shipping boxes?
Absolutely. The services sector has huge potential here, too. Look at the provisions on investment, like in semiconductors and biotech that we mentioned.
Yeah.
That could really spur a whole new wave of collaboration. Just imagine a small U.S. biotech startup, right? Maybe they have amazing tech, but they're short on capital.
A familiar story.
Right. Well, now they might be able to get funding or find a strategic partner in one of these big South Korean companies looking to invest here in the U.S.
So the investment flows create partnership opportunities.
Precisely. If we connect this to the bigger picture, these investment commitments create a really powerful incentive for that kind of cross-border partnership and, knowledge sharing. That could be a lifeline for small capital-intensive businesses.
Oh, okay.
And beyond tech, think about professional services, law firms, accounting, IT support, consulting.
All of that.
They could see new demand. You'll have South Korean companies needing help setting up or expanding here, and U.S. companies needing guidance on navigating the new rules in Korea. It flows both ways.
Those growth paths sound promising, definitely. And that idea of collaboration for startups, that's really interesting. But as you hinted earlier, trade deals often cut both ways. For every opportunity, there's usually a challenge somewhere.
That's the reality, yes.
So for these smaller independent businesses, where are the biggest headwinds? Where is the friction likely to be, especially with this new tariff?
Well, the primary challenge, no question, is that new 15% tariff on South Korean imports. It's straightforward. This will directly raise the cost of goods for a lot of American retailers, distributors, manufacturers, anyone who relies on South Korean components or finished products.
Can you give us an example? Make it concrete.
Sure. A really clear one is the K-beauty market. Skincare, cosmetics.
Right. Very popular.
Hugely popular. South Korea is a global leader there. So you have many small U.S. retailers, little online shops, maybe brick-and-mortar stores specializing in these products.
Okay.
For them, this new tariff could mean a substantial hike in their cost of goods. Suddenly, everything they import is 15% more expensive.
Ow.
Yeah. And it forces a tough choice. Either they absorb that cost, which shrinks their already likely tight profit margins, or they pass the increase onto their customers. And if they do that, they risk losing market share, maybe losing loyal customers who are price sensitive.
Is it classic squeeze?
Exactly. As Chris Lehnes, our source, noted, some retailers felt a 25% tariff would have been a killer. Even 15% is quoted as a huge increase in costs. So it's not just numbers. It's potentially hitting brand loyalty, their competitive edge. And this ripple effect, it goes beyond just consumer goods like K-beauty.
How so?
Think about a small U.S. manufacturer. Maybe they make some kind of electronic device and they source a specific chip or maybe a display screen from South Korea.
Lots of those components come from there.
They do. So now that manufacturer faces higher input costs because of the 15% tariff on that crucial part. That could make their final product, the one they assemble here, less competitive against rivals, maybe rivals who source elsewhere or are larger.
And small guys don't have the same leverage as big corporations.
Exactly. Large companies might negotiate bulk discounts, or they might have the flexibility to shift production lines, find alternative suppliers more easily. Smaller firms often have fewer options, fewer resources to cushion that blow. It makes them disproportionately vulnerable.
That's a really sobering point about the ripple effect, and it raises an important question. Thinking about that huge South Korean investment coming into the U.S., while that's great for the overall economy, could those large South Korean companies, now setting up shop here with potentially big resources, actually pose a competitive threat to existing small American businesses in those same sectors?
Yeah, that's a very astute point. It's the flip side of the investment coin.
Right.
While these investments are definitely a boon for the U.S. economy overall, designed to boost industries, they could also empower these South Korean firms to build a really strong domestic presence here.
Okay.
And that means they might end up competing directly with smaller American companies already in that space.
So the investment brings jobs, but also new competition.
Potentially, yes. Imagine a large, well-funded foreign entity entering a market. They've got capital, established processes, maybe brand recognition already. They could potentially squeeze out smaller, local players who just don't have the scale or the resources to compete head-to-head on price or R&D.
It's a delicate balance, then.
It really is. It's about welcoming beneficial investment while also trying to make sure it doesn't inadvertently stifle our own domestic small business ecosystem.
Right.
It's not just direct product competition either. It could be about market power shifting or even, innovation leadership in certain niches if these big players set up major R&D here.
So what does this all mean? I mean, given this kind of dual reality you've described, real opportunity, but also real challenge,
Yeah.
how can small businesses actually navigate this? How do they not just survive, but maybe even thrive under this new trade deal? What's the playbook?
Yeah, it really boils down to a few key things. Strategic planning, definitely resourcefulness, and just a willingness to adapt. So for those small businesses looking at South Korea as an export market, the message is basically, the time to act is now. Don't wait.
What should they do?
Leverage the resources available. The U.S. government actually offers quite a bit through agencies like the Small Business Administration, the SBA, and the U.S. Commercial Service.
What kind of help?
Things like counseling, market research specific to Korea, help navigating export rules. But success won't just happen. It really depends on doing your homework, having a well-researched, well-executed export strategy that understands the new playing field.
Makes sense. What about the businesses focused here domestically, the ones potentially facing higher import costs or new competition?
For them, especially if they're in retail or manufacturing, the absolute priority has got to be supply chain resilience.
Resilience.
Actively exploring alternatives. Don't be reliant on a single source, especially if it's now subject to tariffs. Look for other suppliers, maybe domestically. Or look at suppliers in other countries that aren't affected by this specific deal.
Diversify the sources.
Exactly. Let's go back to that K-beauty retailer example.
Okay.
Resilience for them might mean actively seeking out up-and-coming domestic beauty brands, or maybe collaborating with U.S. formulators to create their own exclusive product lines. Or, working with suppliers in, say, Europe or other parts of Asia to offer a wider mix of products, reducing that dependence on South Korean imports.
Got it. Spread the risk.
Spread the risk, broaden the offering, and then maybe the most important point, for all small businesses, regardless of their focus, this new environment really underscores the value of innovation and specialization.
How so?
Well, when you're faced with increased competition, maybe from bigger players or imports, one of the best ways a small business can stand out is by doubling down on what makes it unique.
Finding your niche.
Finding your niche, exactly.
Yeah.
Focusing on a high-quality product, offering a specific value proposition that a larger competitor just can't easily copy.
Like what?
It could be anything, really. Maybe emphasizing local production, telling that story. Maybe championing sustainable practices, if that resonates with your customers. Or simply providing truly exceptional personalized customer service that builds incredible loyalty. That's hard for big companies to replicate at scale. Essentially, this new economic climate, it really rewards ingenuity and having a very clear brand identity. Know what you stand for and communicate it well.
So wrapping this up then, as we sort of explored today, this new trade deal with South Korea, it's definitely not a simple story, is it?
No, not at all.
It really seems to create this dual reality. There's genuine, unprecedented opportunity for some small businesses, but also pretty significant challenges for others.
Exactly right. It is certainly not a one-size-fits-all situation. The actual impact on any given small business will really be determined by what sector they're in, what market they focus on, and maybe most critically, their ability to strategically adapt to these changing conditions.
It feels like the era of maybe a relatively seamless, duty-free trade environment with South Korea is, well, it's over, or at least evolving. It's being replaced by a new reality, perhaps more like managed trade.
That seems like a fair description.
So the final question, maybe the provocative thought for you listening, is this. Whether you're a small business owner trying to figure this out or just someone interested in how the economy works, how will you or how will the businesses, adapt? How do you become not just resilient, but agile? How do you leverage the resources out there to perhaps ride this wave to success in what's clearly an evolving global marketplace?